Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, let's focus on Man Infraconstruction now. The group has acquired a project in South Mumbai with a total construction area of approximately 22 lakh square feet. This project is expected to generate total sales value of above 2100 crore rupees. Manan Shah, the managing director at the company, is joining us now to discuss this and the other demand trends and what's happening in the company as well. Manan, good afternoon. Thank you so much for joining us. Well, give us some details about this particular project. Is it a property which was already under construction? What is the detail with respect to that particular project that you've acquired? Will it be in a joint development that you will basically develop it? And by when will you be able to deliver this project?
Good afternoon. So basically, this project is at Marine Lines East, and the project is under the acquisition stage. So we've just completed the due diligence process. And yes, it's going to be a joint venture, but it's a DM model where the landlord is going to be the partner in this project, and we are going to share the top line revenue from them. All the costs and all is basically going to be borne by the landowner partners over here. In terms of the project highlights, it's going to be a luxury property, ocean-facing residences. We've got apartments ranging between 3-bed, 4-bed, and 5-bed residences accordingly. And this project is intended to start by around 6 to 7 months from today. And the launch would happen in the month of December or January in the coming forward months. We intend to deliver this project in maximum time of around 4 to 4.5 years from the date of launch.
Manan, just a follow-up question over there. So you said that there would be a revenue sharing model as far as, the partner is concerned. So number one, what is the total pre-sales that is possible from this particular project? And what would be your share and what would be the partner's share?
So how this model basically works is all the costs have been borne by the landowner. We take the revenue from whatever sales that we've generated. So for example, the sales over here, what we're expecting it to be is around 2,100 crores on the conservative basis. It may be further more as well. On this, we charge a 14% fee. This 14% fee would be charged on the 2,100 crores that the company would be generating. And that would be our revenue basically coming in from that project.
Okay.
So approximately, you say in terms of interest costs, because the money is also going to be deployed by us, we're expecting around 400 crores of profitability from this project.
So basically, you will be getting 14% of 2,100 crores. That will be around 300 crore rupees if we do that exactly in that number. So there'll be no cost from your end in that case, you're saying. The construction cost will also be borne by your partner?
Yes. So basically, we would be charging a PMC fee also for the construction cost that is borne by the partner. Plus the money that is deployed in the form of debt. So we would be attracting interest also from that. That consolidates everything and sums up to approximately around 400 crores.
Okay. So, in FY24, in the quarter gone by, you managed to get in a portion of the total 540 crore pref issue allotment. So when is the remainder of the money going to come in? We understand this is to non-promoter entities that, the allotment was made to. So when is the money going to come in? And secondly, what projects are going to utilize this particular funds for?
So the rest of the money, they have a total timeline of 18 months from the date of the first warrants that's issued. So we are expecting it within that span of time. A lot of people have shown an interest to even complete and take the issuance of the shares. The usage of the money is going to be basically for the new acquisitions that we are doing. So one of the project is this one, which we've already just announced last week. Apart from this, we have eyed a couple of new projects in the western suburbs, central suburbs also, which are unannounced yet, but they are the final leg of negotiation where we are about to win the bid or the tenders for these kind of projects. So the money which is going to be raised further and which is going to be coming in is going to be utilized for further acquisitions only and the growth.
Okay, all right. So you'll be using it for acquisitions and growth. You have a big exposure to the Ghatkopar market in the Mumbai city. You had been able to book around 300 crore rupees in the quarter gone by. How much is the unsold inventory there right now? What is the outlook in terms of the potential from that particular project or that geography?
So basically what we are expecting is, it's just been a month since we've launched and 25% stock is already sold out. By next year, this time, we are hoping that more than 50% sales will already be happening from this very particular project because the momentum is very strong. And this was just a pre-launch. The launch is about to happen probably in the next month, in next 10 days time, in fact.
Okay, so only in pre-launch you were able to sell 330 crore rupees, you're saying?
That's right.
Oh, okay.
If I could extend that point further, Manan, give us a sense in the coming year, FY25, what kind of pre-sales are you targeting? So which are the projects that will hit the revenue recognition phase in FY25, and what will be the growth that we can expect on FY24?
See, the projects that we are intending to launch is going to be a Pali Hill project, which we've recently won the bid for. The second, we would be completing one of the projects, which is at Ghatkopar only, where the OC is received. So the realization will start flowing in of the last leg. That's the second one. Ville Parle, we have acquired a new project, which is going to be one of the largest redevelopments of Ville Parle West. That is intended to be launched. Tarve project we've already launched last year in the end, around say November time. So that realization again would start flowing in this year. So if I do a summary of the overall thing, the targeted sales is going to be more than 1,500 crores of pre-sale value. Everything will not be realized in this year because there are certain projects which have just started in terms of construction, but the pre-sales value you can combine and consolidate it towards 1,500 crores and upwards.
Okay, 1,500 crore rupees. That'll be a big jump from FY24 levels, but will be equal to the FY23 sales that you saw, 1,448 crore rupees. Where does the US real estate business come in the picture? How is the sales picture looking like there? Because you have investment of around 100 crore plus over there. So what's the return developing there? What's the unsold inventory?
So we've got 3 projects right now, out of which one project is a villa project where we had developed 2 villas. One villa is already sold. The second one is also ready possession, which we've just listed down for sales. So we're expecting that also to be completed in a month's time. Over and above that, there are 2 land parcels. So we've acquired 2 land parcels, one of which where we've got branded residences of Ritz-Carlton. That project is intended to be launched in the next 1 month's time. So in the month of April end or May first week, we're going to launch that project. The total out of these 3 projects, one will get sold out, like I said, in a month, and the rest 2 is planned in the next 6 months' time. So if I say the Ritz-Carlton project will be launched in May, the other one we've just acquired the land, we are consolidating and completing the further processes required relating to the land due diligence and all. That is intended to be launched in the next year, first quarter.
Okay. Manan, now give us a sense of the EPC business and how that is shaping out, and give us a sense of the outlook for FY25. Currently, you're sitting on an order book of a little over 1,000 crore. So what is the revenue visibility you can see for FY25? We also understand, with the election code of conduct, there could be a bit of a lull as far as ordering activity is concerned. Does it impact you, or do you get majority of your projects from the private players? And so what is the outlook over there?
So if you see the EPC book, basically the majority of the order book that you're seeing is coming in from the port sector that we're developing. Since we do not work for any other real estate player, we work only for us. So majority of the order book which is going to come in the future, apart from the port, is going to be our own order book. So that is not going to get affected where we are not doing any kind of bidding process. Every project which MICL Group Manan Infra develops is going to be done, constructed in-house. So that's where we get the PMC income sometimes. You might not see the order book coming in because, like I said, it's executed under DM model. So it comes straight in the form of PMC. And there are certain places where we develop the project itself in the subsidy, and the company charges just a PMC fee again. So you might not see an order book coming in, but the revenue potential that's expected is basically we have got around 20 million square feet of construction area that we are going to develop in the next 5 to 6 years, which is of our own projects. Now, if we consider the construction margin on this, that's going to flow in the next 5 to 7 years' time.
Okay, Manan, last question before we let you go. How much of your total projects right now are under redevelopment? Like how much the portfolio consists of redevelopment? Are you seeing a lot of bidding wars here?
We've got around 60% to 65% of redevelopment portfolio of our overall listing, but we do not face much issues on like counter firing in terms of our redevelopment pitches, because see, the way we operate is we are creating out spaces which does not probably exist, like the Ghatkopar project which we just launched. It's a cluster redevelopment of 10 buildings. Now, nobody in Ghatkopar East has ever done this before. We are the first ones to do it. Even in Ville Parle West that we are upcoming, that's going to be around a 3-acre land parcel. Again, in Ville Parle West, nobody has ever developed 3 acre of a land parcel. Plus, because the company has been historically debt-free and been delivering every single project before time, the society people are preferring such kind of developers, and we've been able to easily win these kind of bids.
Thank you so much, Manan, for your time here. We wish you all the best, for Q4 as well as FY25. Let's now slip into a short break. On the other side, in our special segment, Midcap Spotlight, we will focus on Skipper Limited, which is buzzing in today's trading session. Stay tuned.